In this video, I'm going to break down the one ICT trading strategy for life. This strategy has allowed me to get funded over $300,000 in the last 90 days. But don't take my word for it. Here's a sneak peek of some of the incredible results that the exclusive members have achieved trading this exact system. I'm going to break it all down step by step. There are 3 steps in total. Step number 1 is time frame selection. Step number 2 is the power of 3. Step number 3 is risk management. Make sure to stick around until the end of this video, where I'll run through a case study of a real trade that both myself and all of the exclusive members took trading this exact system. You're genuinely going to get so much value from this video. Let's dive in. So this right here is the one ICT trading strategy for life. And this is the process that I follow every single day within the markets. And this is the exact process that has allowed me to get funded hundreds of thousands of dollars. But not only that, this is the process that has allowed me to become consistently profitable. I've broken it down into 3 steps. Step number 1 is time frame selection. Step number 2 is the power of 3. Step number 3 is risk management. The most important is step number 1, which is time frame selection. The first thing that you need to ask yourself is, do you know what type of trader you are? If the answer is no and you don't know what type of trader you are, then you simply need to work to understand what type of trader you are. And, at the end of the day, I can't tell you what type of trader you should be. However, one thing that I can say is when I first started trading over 7 years ago, I thought that I wanted to become a swing trader. However, what I quickly realized is I simply didn't have the patience for swing trading. But let's say the answer is yes, and you do know what type of trader you are. You primarily are going to fit into 3 different buckets. Bucket number 1 is a swing trader. This is where you're primarily going to be analyzing on the weekly, daily, and executing on the 4-hour. The second bucket is a shorter term, or I like to call a hybrid trader. This is where a lot of your analysis is going to be placed on the hourly and 15-minute, and execution is also on the 15-minute time frame. So this is the bucket that I personally fall into. And as I said, I found that swing trading, I wasn't patient enough for that. But also we have bucket number 3, which is scalping. You're going to be analyzing and executing on the 5-minute and 1-minute. What I found on the 1-minute time frame is I was getting way too emotional. There was so much noise, and therefore this prevented me from making accurate decisions. But at the end of the day, you need to decide what sort of trader you want to be. And your trading should revolve around your life rather than your life revolving around trading. And that's why this is the most important step of the process. And if you get this wrong, and if you don't trade a style that's suitable for you in your lifestyle, there's no way that you could ever succeed long-term trading the financial markets. Please note the lowest time frame is only used for the execution of the trade. And your bias should not change unless there's a change on your higher time frame. So let's say you're a swing trader, weekly, daily, and 4-hour. Your bias can only change if it starts getting invalidated on the weekly time frame, which is your higher time frame. Okay, great. So that's step number 1, which is time frame selection. This then moves us to step number 2, which is the power of 3. And step number 1 was incredible. However, if you do not understand the framework of step number 2, there is no way that you could ever become profitable within the markets. And step number 2 is the power of 3. And this is where we start delving deep into strategy. And what I've simply done is broken this down into a further 4-step process. Step number 1 is directional bias. Step number 2 is, are we during a kill zone? Step number 3 is the ICT power of 3. And step number 4 is our confirmation. So let's just break this all down step by step. The first thing that you need to ask yourself is when you turn up to the market is, what is my directional bias? If you do not have a directional bias, i.e. the answer is no, then you should be doing absolutely nothing within the market. So let's say that the market is just simply consolidating, and let's say that you trade a trend following system. Then if the market is showing a directional bias, that indicates trending conditions. And if and only if that is occurring, then we can look for a potential trade. So if the answer is yes and we have a clear directional bias, then We have to wait for the next confluence. However, at least we can start going down the process and we can tick off these confluences one by one. So, let's say that the market is trending to the upside, like so. Then the answer would be yes, we have a clear directional bias and therefore we can look for long trades. Let's say the market's trending to the downside. Again, we have clear directional bias and therefore we can look for potential short trades on this market. If the market is just simply consolidating and we have no directional bias, then we do absolutely nothing. So step number 2 of the strategy of the power of 3 is, are we during a kill zone? So this could be either during the London kill zone or this could be also during the New York kill zone. And the reason why we choose the London and the New York kill zone is because this is when the most amount of volatility is coming into the market, and therefore this is when we can expect the largest trending conditions. And 7 years ago when I first started trading, I had no idea about kill zones, market timing, and intraday seasonality. However, ever since that I've incorporated these specific times to trade, my win rate not only increased dramatically, but also I was a lot more calm within the market. And that's because I had specific time windows that I can sit down every single day to execute my trades. And I wasn't sat there like a maniac at 12 o'clock midnight trying to trade the Asian session and trade a session that didn't suit my lifestyle. And so if the answer is no and we are not during a kill zone, then we should be doing absolutely nothing. If the answer is yes and we are during a kill zone, then great, we can start looking for a potential trade. However, we still need to wait for the next confluence. Okay, so step number 3 is the ICT power of 3. And simply put, let's just say that this right here is the Asia session high. What we're going to be looking for is a run of buy-side liquidity. This right here is what we call the ICT power of 3. And again, once we've seen the ICT power of 3, we can start looking for a potential trade. But just seeing the ICT alone is not enough to execute a trade within the market. If the answer is no and we haven't seen an ICT power of 3, again, we do absolutely nothing. And just to recap, this ICT power of 3 has to occur when we, of course, have a clear directional bias, we are during a kill zone, and then that is what we call a high probability setup. So if we've seen that, we of course then still need to wait for our final step. And step number 4 of the process is our confirmation. You've probably heard the saying, no confirmation, no trade. And that is simply the reality. So let's say that we see an ICT power of 3. We have a clear directional bias. We are during a kill zone. And now we finally see our confirmation. It's only at this stage where we can actually take the trade. And of course, we will have a clear invalidation, clear targets, and then we can look at executing a trade within the market. But it's only when these 4 steps and these 4 confluences actually line up within the market is when we can actually take a trade. Then once we've executed the trade, it's either going to be a win or it's going to be a loss. And then we are at the end of the process. And again, if you're going to look at executing a trade again, all of these confluences then need to line up over and over again in order for us to actually place another trade within the market. So this right here is the process that I follow every single day before executing a trade within the market. And this is the ICT power of 3. Okay, so that step was incredible and it should give you some really valuable insight of my exact thought process every single day when I'm turning up to the market. And it's the discipline and patience of executing these processes over and over again is what really gives you the edge within the market. Okay, so step number 2 is incredible. But if you don't understand step number 3, you will continue to blow many accounts. And step number 3 is risk management. And the first thing that you need to ask yourself is, do you know your max losing streak? If the answer is no and you do not know what the maximum amount of losing trades in a row is for your trading strategy, then it's very important and you need to work to understand your risk of ruin. i.e. blowing an account. You can do this by simply backtesting your trading strategy. For me, I've done this over hundreds and hundreds of trades to find out what my maximum losing streak is. Then once you've done this, you can use that to reverse engineer your risk profile. And that just simply means how much risk you're going to take every single trade. And for me, for example, let's just take gold. I know that my max losing streak is 6 trades in a row. And let's say that you're trading a funded account. Often the maximum drawdowns is 10%. So therefore, if I know that my maximum losing streak is 6 trades in a row, if I'm using 1% risk every single day within the markets, I know that it's very unlikely that I'm ever going to lose 10% on my account, because the maximum drawdown that I've ever seen with 1% risk would actually be 6%. So therefore, you need to bake in your max drawdown into your risk management. So if the answer is yes, like myself, and you do know your maximum drawdown, you then need to ask yourself, are you actually in a drawdown? If the answer is no and you're not in a drawdown, then I recommend to just use standard risk. So for me, that would be 1%. However, at the end of the day, I'm not here to tell you what you should be risking within the markets. That is for you to determine based on what your strategy is and based on your own data. If the answer is yes, then what I recommend doing is to continue to use standard risk. However, some people like to use reduced risk. And the reason why someone would use reduced risk is it basically gives you more bullets to actually get out of drawdown. Basically, it gives you more chances, i.e. more trades, and will prevent you from blowing your account faster. So implementing reduced risk when you are in drawdown may be beneficial for you. The next thing that you need to ask yourself is, are you in a 6% plus drawdown? And remember, the maximum drawdown that I've seen is 6%, so really anywhere from 5 to 6%, if I'm in that amount of drawdown, then what I actually recommend doing is buying another funding challenge. And this may seem very counterintuitive to begin with, but I want you guys to hear me out. Okay, so let's say that this is your equity curve right here. And let's say that this level right here is a 6% drawdown. So that's this area right here. Well, based on historic data, when we've seen a drawdown of say 5 or 6%, pretty much every single time we've seen price come out of this drawdown. So what happens actually when you buy a challenge when you are during a significant drawdown? Well, the first challenge that you actually had, which is in drawdown, right? At this stage right here, you would have came out of drawdown on that first challenge. But also on the second challenge that you've just bought, that challenge will be past or at least very, very close to. And therefore taking advantage of your drawdown periods and actually buying another challenge when you are in drawdown is something that I've had a lot of success with, and also a lot of my members have had a lot of success with this as well. And I'd like to really call this more of a advanced prop firm scaling technique. However, if used properly, can be very, very beneficial to you. And let's just say that the answer is no and you're not in a 5 or 6% drawdown, then you're going to keep using standard risk, or depending on what type of trader you are, you can look at using reduced risk. And so this is the risk management step. And therefore, we have now covered absolutely everything that goes into my trading plan. And these are the sort of questions that I'm asking myself every single day within the market. And let's just say that one of these processes is not working. Then that simply means that I do not have a trade within the market. Because time frame selection leads into the power of 3. The power of 3 leads into risk management. And this right here is the one strategy for life. So literally every single one of these processes needs to be in place in order for me to even consider executing a trade within the market. And it's really the discipline of sticking to a process like this that will genuinely help you become a consistently profitable trader. So, make sure to watch that back as many times as you want, because we have covered a lot of content right here. But now it's time to break this all down into a live trade case study so we can piece this all together. Guys, so now let's just piece this all together step by step. As we've discussed in step number 1 in time frame selection, I'm more of a kind of hybrid and intraday trader. That means that the majority of my analysis is based on the 15-minute time frame, but I'm also executing off that time frame as well. and occasionally I will look at the hourly time frame. So now that I understand what type of trader I am, I can then look at executing my strategy, which is the power of 3. Remember, I've added a few of my own concepts to this to make it fully mechanical, fully defined, and fully rule-based. Because a huge problem that I found out there on the internet is a lot of people teach this strategy, but they don't give it in a mechanical framework. And this is what I'm about to do right here. So this right here is gold on the 15-minute time frame. And the first thing that we need to understand is directional bias. The most mechanical way that I've ever seen is by simply using the EMAs. And you're going to have to hear me out here. I know a lot of people don't like EMAs, but I can assure you this is a very effective way to find whether the market's trending or whether the market is consolidating. We're not looking at taking trades directly off the EMAs, but we're just using it as a kind of general bias. And the one that I personally use is this one right here, EMA 20, 50, 100, and 200. It's the one by Dr. Sweet. So apply that to your chart. You can open up the indicator right here, and we only need the bottom 3. So this is the 50, 100, and 200. We do not need the top one. This is the 20. Click OK, and they've now applied to your charts. So when the 50 EMA is greater than the 100, which is greater than the 200, this indicates that we are long bias on this market. And all that simply means is the general direction, and the market is more likely to trend to the upside. So if we just zoom out here and get a macro perspective, we can see that price is genuinely moving from bottom left to top right. So, just in terms of momentum, in terms of the trend, the market is clearly moving to the upside. And therefore, we need to ensure that we are trading with the trend. Okay, great. So we've established that we are long bias right here. I'm just going to remove the EMAs just for simplicity, but please keep in the back of your mind that we are long bias. So looking back at the process right here, you can see this is step number 1, which was directional bias. That is now ticked off because we understand we are long bias. Step number 2 on the process is, are we during a kill zone? And you can see right here, we are currently during the New York kill zone. I get this question literally every single day, and it's what is your session indicator? It's this one right here, trading sessions by Sonar Lab. Once you've applied that to your chart, the session timings, and bearing in mind this is from a New York time zone. We have the Asian session from 7 p.m. until 12 o'clock midnight. We have the London session from 3 a.m. until 5 a.m. and we have the New York session from 8 a.m. until 10 a.m. So these are the 3 kill zones. However, we only want to be executing during the London kill zone and the New York kill zone. Okay, great. So we've understood that we are during a kill zone. So therefore, that is a tick for step number 2. Step number 3 is the ICT power of 3. So we need to look for an ICT power of 3. And because we are long bias, we need to identify sell side liquidity. And we simply have sell side liquidity resting below the Asian session low. So essentially what we're looking for is an ICT power of 3, running the sell side liquidity below the Asian session low, and then we can look for a potential long trade in this market. Remember to go with our higher time frame bias. I understand a lot of people are kind of cherry picking it. So let me just share with you the analysis that was sent to the exclusive community, just so you can see this was actually something that I was looking at ahead of time. You can see we run the sell side liquidity right here. And it's at this stage, once we've run the liquidity, this is what we call an ICT power of 3. And therefore we can now check this off. We have seen an ICT power of 3. And step number 4 is the most important, which is our confirmation. And the confirmation that I use every single day is simply a bullish confirmation. If we're looking for longs, then we want to see a bullish confirmation, because this indicates that buyers are actually stepping into the market. Therefore, this indicates a depletion of bearish pressure and actually indicates a injection of bullish pressure into the market. So you can see that we do get a bullish confirmation right here after we've seen the ICT power of 3. And so this right here is a valid confirmation. Therefore, we can go ahead and enter a buy position on the break of the confirmation candle high. Let me just mark that on right here. So it's this high right here. Invalidation goes just below the liquidity sweep. Give it a little bit of room to breathe. And we're simply targeting a mechanical 1 to 2 risk to reward. We're not looking for a home run here. We're just looking to get in and out of the market. So therefore, this is step number 4, confirmation. We can tick that off, and therefore we can take the trade. You can see that we're triggered long in this trade right here on the break of that bullish candle high. And let me just share with you the exact entry that was sent to the exclusive community. So now that we're actually triggered, it's literally set and forget. We're either stopped out here for a -1R, or our take profit is hit for a 2R. There's no micromanaging, no getting emotional. We literally just need to allow this trade to play out. You can see that we did go into a slight drawdown right here, around 50% towards the stop loss. However, it's important to not micromanage. And you can see just after the New York session, this trade did hit take profit for a 1 to 2 risk to reward. For any of you guys that are thinking this was cherry picked, let me just share the execution proof on screen right now. And so it was following the 3-step process that I shared with you at the start of the video that has allowed me to piece together every single thing in order to actually make an accurate decision to execute within the market without any hesitation and to follow my trade plan absolutely to the T. And really a lot of this just comes from experience within the market. Having the patience to hold the trade all the way to take profit, to not close the trade early when we've seen some sort of drawdown, and to not get emotional, when the trade was fairly near our stop loss. And just so you guys can see, this is a live FTMO account right here. This is my current equity curve. We're running plus 6.45%, which is plus $6,450. And if we scroll down right here, you can further see execution proof of this trade right here, just to further show you guys that I am actually taking these trades every single day within the market. If you want to become consistently profitable, then make sure to join my free Discord community. The link is in the description down below. However, if you do want results faster, then make sure to check out my exclusive community and one-on-one mentorship. The link is also in the description down below. As always, thanks so much for your time and support, and you take care, guys. Bye-bye.